Motherfucker.
Yo, what's up? What's up, guys? Interesting day. Interesting. I thought it was going to just be a boring, short the market kind of day, but it looked like there was a huge crash in silver, gold, copper, steel, oil, all at the same time. And that means there's a liquidity problem. That means something's wrong with the plumbing of the system. And I was thinking, which of the currencies did it? Was it the yen? Was it the euro? Was it the Chinese yuan? Who could it be? Well, looks like it was the Chinese. Or the US fighting the Chinese. I don't know which one. I don't know who did it, but it was one of the two. Something happened for sure in that case. But first, let's review how the QQQ is doing. So if you look at this is probably the weakest rally we've had so far in the NASDAQ. So we bounced from here for a couple days, right? Going into Monday. And then we had a crash here, okay, in the morning on Wednesday. And then again on Thursday, this was expected, right? Because you can see how weak everything is. This has not happened before. Like if you look at the way things have recovered, every time it got below this rectangle, it quickly gets back in. And then once it gets back in, it stays there. It's like bounce down, gets back up, goes into the rectangle, stays there. Bounce down, gets back in the rectangle, stays there. Bounce down, gets into the rectangle. Notice how it spends a lot of hours stuck below the yellow zone. So I would say this is like your 50-yard line if you were thinking like that. And so the bulls would have to push it through, right? Never happened. Like here, you open right below that yellow zone and you go right straight down, and then you just barely try to recover the rest of the day. And then here, you open pretty much a little bit above yesterday's straight down. It's just like, come on, dude, what the fuck is it doing? So past 2 days, all I've been doing is like just short Palantir, short MSTR. So basically short Bitcoin, short Palantir, because those are the weakest, right? Software is the weakest. Bitcoin's the weakest of quote unquote the more aggressive high beta sectors. Now let's look at semiconductors. Now look at that. Look at that, right? So let me take this away. The last time we had a red bar in this upper level here, this upper zone, you see here, we opened above it and then we went down. And then the next basically hour and a half, we went straight down to the bottom. And then we closed like this. Guess what that means? That means, I don't know if I want to do this before a 3-day weekend, but that means if tomorrow's inflation numbers are bad, like we have high inflation results, so they will happen 1 hour before the market opens, so 8:30 Eastern. If that's bad, so pre-market 1 hour before, you should see the NASDAQ just puking its guts out going. And so I would assume that if that occurs and it opens like that and it doesn't recover, like let's say that the semiconductors open around here, like the bottom of this yellow, and then it tries to recover 15 minutes into it, and then it stalls out, right? Stalls out. And then by 30 minutes in, so 10 o'clock Eastern, it just gets stuck and starts rolling over. Then I would expect it just to go straight down real deep. And it might even, and people, might be getting so afraid before a 3-day weekend that, and you have to also understand the Chinese market is going to be closed, right? So, and the Europeans will be closed for the whole week, and the Europeans will be already done trading by then. They're about to be done trading. So they might decide to cash out, right? So any Chinese in the European market, so if they're in the European market, so when the European market closes, it's just at the same time we open, then they might just start running off they might run. Like everybody will start running. so okay. Think about that, right? So let's see if it drops below here. So let's look back at the SPY. Let's look back at the SPY. Okay, this is not good. It's just below 682 on the SPY. So S&P 500. So we're below the gamma flip line. That means it should be very easy for the selling to start going wild. Once it drops below 677, lights out, then this thing is going straight back down to 650. It could all happen tomorrow. So if you're thinking of doing anything on Friday, just wake up in the morning and you want to do one quick trade, do that. Just see what happens. That will be a good time just to short everything and just go make some money within like an hour and get out before the 3-day weekend and you're done. Now, if you're crazier and you want to hold those shorts into the weekend because you think like there'll be a bloody Tuesday, I don't know. You can take that chance because it could be it, right? Like I told you yesterday, you see how it acts up here on S&P. We've already failed. Like here it gets up, shoots down. Here it gets up, shoots down. Here it gets up there, shoots down. Here it gets up there. So every time it reaches the high, near the all-time highs, it just gets rejected. And I don't know how many times it can play that game. Eventually, some kind of news will occur where people will just give up. They'll throw up their hands and go like, oh, okay, we can't keep this up no more. Nobody is willing to buy at 677 in the SPY. Then it's going down here, right? Like, let's say it does do that on Friday. Then Tuesday, it will be way easy for someone just to say more bad news over the weekend. And then when Tuesday opens, everyone's freaking out and they just want out. Then that's it. You're going straight down to 620. It could all happen next week. I don't know. But that could be the game plan. News is not released, in a random fashion. They purposely try to release news in a way that allows the rich boys to get out, let the suckers come in to buy crap just to keep it together so that there's enough volume and time for everyone to sell their positions. And then the losers, the small money, the weak hands hold the bag and they just let the rug pull happen and drop. That's it. It could be like that. The other option is that it's another false break. It pumps back up. We go to a new high because the next time we support 677 and we jump back up, then I think semiconductors can try to hold it together and lift everything up, because what happened this morning was interesting. They tried to pump Micron, SanDisk, all these other things, because one of the Japanese memory manufacturers had a very good earnings. It went up 20 to 30% overnight. It juiced up all the other semiconductors. So that allowed some of the semiconductors to carry in the morning and go up here, right? But no one else was having it, because if you look at software, IGV just bled everything right in the morning. It just bled. So we're down 2.73% at the close on IGV. And that was actually the most bought ETF in the last couple days, actually. So somebody's been trying to catch all the knives. I have no idea why. Who's trying to catch all this? This is the worst time to do it. None of the earnings have been enough to save it. There's only one good earnings today. So that overnight, at the afternoon, we had Fastly. Fastly does distribution of, I think, like cloud distribution, kind of like what Akame does back in the day for video hosting and stuff. So they probably have their tentacles in a lot of places. It's kind of like CrowdStrike and Cloudflare and all those other like companies. They're all in the same area. Like, so if you go to San Francisco, go to Brannan Street. Brannan Street is where all these little small, quote unquote, small meaning they have small office buildings, but they pretty much build out your whole internet infrastructure. Okay, so these got at the software level. I mean, not the hardware level, at the software level. So Fastly is one of them. Apparently have very good earnings. They're probably used in your YouTube, Netflix, any kind of advanced way of loading balancing all your like well, everybody's like on their phones trying to watch the same thing at the same time. So like, let's say like you're watching the Super Bowl, everybody's tuning in at the same time, right? So you have to like manage all that, and these kinds of companies do that kind of work. So this was up like nearly 80% at the peak. So it went wild, and it was like practically the only one. Everything else just went crap. AMKR like is dropping overnight too. I have no idea what's happening to that one. Opens -7. Holy shit. Spotify down 8%. Robinhood down 8.79%. Let's see how so Cloudflare. Yeah, Cloudflare would look like it was about to go up, but then it just gave up everything, down 2%. Man, what else? I mean, Cisco was like the one that really made things worse, right? AppLovin, I think they do the ads. So they manage ads, like when you see the ads, the ad market. So all advertisement stuff in the software level, down 20%. Oh, this is a battery maker. Who cares? I don't know. So this one, okay, I'll look at it some other time. There's too much to discuss right now. Anything else? Nothing. Let's see what DraftKings is still at the low. Yeah, it's still down. Yeah, none of these things are gonna go. Pinterest. Well, we'll see what happens tomorrow with Pinterest. I don't think it'll be good. Probably puke. Unify. Yeah, this one. Unity. Yeah, it's down 8%. Yeah, so yeah, Shopify down 6.78. So everything's like red, right? You just look at the earnings, all red. Doesn't matter. They all gave it up this week. Nothing's good. Only thing holding up is SanDisk and Micron and just a few other guys. I know ANET went up. So Arista went up 15% when it released, but I don't think that's going to save the market tomorrow. And there was someone else too. Arista's like the kind of competitor of Cisco. They target more for like smaller campuses, like so university level stuff, small company level stuff. Not Cisco is kind of more broad, so bigger, larger projects they'll go to Cisco and stuff. And AMAT, so Applied Materials, AMAT. So this does the semiconductor manufacturing, kind of like what Lam Research and the other one guy, I forgot what the other one was called now. Oh, whatever. But this one was up 8%, I think. But this is a smaller player. This is definitely not going to save semiconductors if you're hoping that is. You're going to need some other crazy news to boost all of them up, because Apple was dropping. I think Apple had some bad judgment legally, so I don't know why it was dropping like crazy, but this was leading the larger Mag 7s down. So this was 5% at the end. So anyway, we're about to hit like 255. Okay, let me read your comments. What earnings are dropping tomorrow? Nothing. So usually Fridays mornings are like nothing important. But I am gonna look at Moderna and CCJ. CCJ is the nuclear miner, so uranium mining. So this is the largest uranium miner. I have to see how this one does. Kind of like how Albemarle is the large lithium miner, at least for the U.S. I mean, if you look at globally, the Chilean miner SQM is larger. It has more business. So, but if you look at AOB today at earnings, it wasn't good enough. So we're gonna have a hard time, I guess, continuing. And the whole sell-off on commodities today, gold, silver, steel, copper, all crashing at the same time, definitely is not gonna help this one. So we have to see how this shakes out, because I don't know where the liquidity issues are coming from. So if people are running away and trying to get dollars, it's because something bad's about to happen, and they have to sell everything they have in their portfolio. So if they have oil, they'll sell it. If they have copper, they'll sell it. If they have silver, they'll sell it. So that's what happened today. The only reason you have a flash crash is because you want to run away and go back into dollars. And the only reason you want dollars is because you think something big is about to happen, or because we just had a glitch and it's just temporary. Like, you know, it's very easy to have glitches. Everything's computerized, right? So if somebody screws up and makes a mistake on their Bloomberg terminal, and they go like, whoops, I pressed the wrong button, and all of a sudden like billions of dollars went one way, and then it spooked somebody else, then it just has a chain reaction. See, like we we don't control that stuff. You think you just buy $1 of GameStop, I mean 1 share of GameStop, you think you're going to change the world. No. The billions of dollars move around the world, and so if somebody had an issue with the yen or some currency, that's a bigger issue. Okay, so that's probably something to look at. Anyway, Moderna is the big one I'll be looking at tomorrow morning. That's it. Okay, any other questions? What's up, Latino? Liquidity problems mean China crashed out their positions. Could be, or the U.S. is fighting China because China is manipulating their currency in a way that they don't like. So the U.S. is fighting them, causing that crash. I don't know. Either one could have happened. All right. What's up, Quick Uncle Volt? Okay, I can't read Latin today. Okay, anyway, let's see. Let's go to what I saw. Okay, let's go. Oh, man, what's the chart look like here? Which one should I use? I should use USD and China. So let's see, CNY. Okay, I'll use this one. All right. And I'll use a 10-minute chart. All right. And then I can overlay silver. So you can see right here, it's simultaneous. And there was a lot of volume in the trade. So silver right here. And then you can compare with dollar yuan. So somebody was dumping all their yuan and going into dollars at this point here. At the same time, everything was crashing. So like if you have a simultaneous crash in all the commodities, you have to be looking at, wait a minute, which currency did it? So it was here. It was somebody. It was either the U.S. Treasury or the Bank of China. One of them did it. So either they didn't like how strong the Chinese yuan was getting. Like, so if the Chinese didn't like that the Chinese yuan was getting too strong, they would do that and crash this. So that could be one possible thing. It could be that the U.S. doesn't like that the Chinese bonds are doing so well, and then they crashed it. I mean, okay, that's possible because they don't want the dollar to go lower. But the dollar was fine against everyone else. So if you look at like the Dixie, it was calm today. I mean, yeah, you see this quick increase, but in general, it was flat for the week. So there was nobody running between euros and the U.S. dollar or the Swiss or the Canadian dollar or the whatever. So I mean, I don't know. You have to go talk to a currency dude. So anybody here that knows currency, you have to speak up, because that's what's important. If you figure that out, then you can figure this out. So let me look at the Japanese yen. So I didn't see nothing with the Japanese yen. See, the Japanese yen has been doing what it's been doing for a while now. It hasn't really been doing anything. So let me take this off. So after the election, it's been selling off. So the dollar is weakening against the yen. So the yen is getting stronger, which is what the Japanese want, which is what the U.S. wants too. So that's fine. That's what they wanted. And even with this, nothing happened to silver, right? So that's the thing. This has been going on for a week now, and silver has been going up. So whoever was buying silver the last couple of days, either they were morons or they were trying to get out at higher prices and escape back to the dollar. So then that means silver is going to go a lot lower now. So this is not a good look for people in silver. This is not a good look. All right, guys. This chart is ugly. I mean, gold is a lot better. Gold is a lot better. Okay, gold still has some kind of trend. But silver looking like this, yeah. Somebody was punking y'all. Somebody was kind of going like, yeah, see, it's back to normal. Just buy silver again. But go back down. All right, so then we've got a 3-day weekend. The Chinese are gone for the whole week for Lunar New Year. Then guess what? What's silver gonna do next week? I don't like it. I don't like the way it's looking here. So we might be able to get silver at 40 again. If somebody's playing a trick on you guys. So I better watch out. Somebody has to figure out why that happened today. Because if you figure it out, you'll figure out what's going to happen next week. But if I don't know the reason, I'm just guessing, right? One guess I have is because we had a bond auction today, okay? And the bond auction is at 10 a.m. my time. So that's 1 p.m. Eastern. So that's way later. So the crash that happened in silver was a couple hours before that, which was a couple hours after the market opened. So it was in between the auction results for the US 30-year bond and the market opened. The market opened, tech was selling off. I understand that. Then I see all of a sudden silver, gold, oil, all that crap, like steel, copper, all that crap just crashing all at once in one short 10-minute burst. And all of a sudden, like after the auction results, which were good, so that means people were buying up the treasuries after that auction results. Did somebody know ahead of time what the auction results were and were running into dollars so that they could buy US bonds a couple hours before the auction results? Did somebody know what the auction results were? Is that why? Because this is a very good one-day return for auctions, okay? Bonds don't move this much very often. So if somebody knew and they just ran over here, they had to cash out into dollars to buy bonds. You know, if I had a lot of silver and gold and whatever, I'm cashing out quick. I'm going back here and I'm going to go buy bonds. The other reason to buy bonds, though, is that you have everything to get bad next week. Okay? That's the bad part about it. The only reason bonds would outperform stocks and commodities at the same time is because something real scary is going to happen next week. You don't sell off everything to buy bonds unless you think that's true. There are times when stocks and bonds go up together. You know, that's the 90s. That was like after the 2008 stuff. We had big booms in bond markets and people bought bonds and stocks together, but they didn't buy commodities, right? They didn't touch oil. They didn't touch silver. They didn't touch any of that. There are times when, you know, commodities go up, stocks go up, but bonds go down. Now, there's a time when bonds go up and those other two go down. What does that mean? That means someone thinks there's a top in the whole market. They think like some big event is going to happen and I got to run to bonds, US bonds. Okay, so I'm giving you a warning right now. I don't have no clue why this happened today. It's either a one-day trick off or it's like a multi-week disaster coming down the line. Okay, so I don't know. You have to talk to the guy who was doing this shit. I knew if Flow State was repping silver was gonna fuck this up. Whenever you see a lot of people, you know, like getting cocky and start talking up like, yeah, I knew silver was gonna pump. Yeah, you know that shit's gonna go bad real quick. Okay, what's up? Deadly radiation. You're broke? Well, you know, hopefully we can help you not be broke. What's up, Garian? No, you shouldn't sell. You shouldn't sell that just yet. Watch how it does tomorrow morning first. Because like I said, this could be a one-off. So look at the bonds, look at the TLT. TLT is a proxy for the US 30-year. You can also look at the total bond market ETF. So there's a Vanguard ETF called BND. If you see this thing spike up again tomorrow, okay, I'd be worried, right? I'd be getting more worried about this. But for now, yeah, don't do anything rash, because it could just be some guy wanted to buy U.S. bonds because they knew ahead of time what the auction results were and they wanted to dump everything, and it just freaked everyone out, right? It could just be that. It's nothing. It's nothing. It's just noise. It has no meaning. If it is something, you'll see tomorrow, I think. And what else? What else to look at? I don't know. I think there's another ETF called AGG, US Aggregate Bond. So you can look at that ETF too. You can look at all that together. Yeah, that's it. That's it for now. And look at the currencies. You have to look at all the currency pairs. See, this is stuff like people won't watch normally. They think like if I just buy a company, it's a good company, things will go well. No, like you got to take into account bonds. You got to take into account commodities. You got to take into account currency, because all those things are competing for your money. They all have a vote to say. If money is going into something, it's going away from something else. Like there's, it's not all about like pure supply demand. Like, oh, if I buy a lot of corn, the corn prices should go up or something. There's always things that get involved, and it's very complex. It becomes very complex. So the system, yeah, is just not like that. It's not so you can't simplify it too much. That's the only reason I look at charts, is because it simplifies the information, so you can look visually what's going on and quickly assess it this way. Because otherwise you would just spend all day reading articles trying to determine things or looking at flows. No. Just look at the price action of multiple assets. Look at that, determine where things are probably going to be, and go from there, because the picture will tell you this whole story very quickly. I can just read this chart and tell you what I think is going on in the broader world just by looking at this, right? Rather than me wasting my time reading text. So that's the main reason I like charts. For that reason, I don't have like a multi-million-dollar operation here with like hired help to go look at their Bloomberg terminals all day and give me a summary every 2 hours. And then I decide how to manage my portfolio. Shit, man, fuck that. So now we got AI. AI can look at pictures a lot easier than text, I assume. So at this point, it's so advanced now that it can just like look at the chart and tell me what's going on instead of me wasting my time looking at thousands of charts. So based on that, it can get information a lot quicker. So I think that's the reason you should use charts. Yeah. Because unless you're like you're on like 100 milligrams of Adderall, like who's gonna spend time reading every little article, every SEC report, every financial statement ever made? No, nobody's gonna do that. So that's why I recommend chart reading, because it's available to everyone at any level. And I think with a very simple way of looking at things, you can make enough money for yourself without having to pay someone else to do it. So, okay. Yeah, that's what they call it. They call it intermarket relationships, intermarket dynamics, intermarket analysis. And that's how you do it. And with charts, it makes it a lot easier. And that's what you have to know. Yeah. Maybe one or two. Yeah, it's only a few people that can do this kind of shit, that can totally destroy markets and stuff. Yeah. Central banks are the main ones. And then you have like the big banks, big multinational banks. And then you also have a lot of rich owners of billion, $trillion portfolios. And you also have pension funds. Pension funds are like one of the biggest, like the California pension funds, like CalPERS, huge. Toronto, public pension funds, huge. New York teachers pension funds, huge. These pension funds are at the billions of dollars. There's a lot of European pension funds, because you know they have to support socialism. So there's tons of these pension funds around the world also controlling the markets. So you have to look at them as well. BlackRock, CalPERS, yeah. You know, I get CalPERS money. You know that because through my parents. So my dad works retired at CalPERS, so I get a little stipend from him. So for life. So after he's gone, I'll get it for life. You know how ridiculous that is? Can you believe that, like, you work at a place and then you die, but I get like a percentage of that pension to me? I never worked in the company. I never worked anywhere in, like, what the fuck? And once he dies, I get it for life. I thought that was a joke. I was like, are you serious? Did you read it right? Doesn't it expire after some time? No. So until I die, I still drain the system. That's how crazy these pensions are. And so you could imagine this is a big bubble. So California is just one huge bubble. I have no clue if, like, the New York systems, the Toronto system, they don't do that anymore. If you go work at the California state government, you're a cop, you're a teacher, you're anything, you're not getting that deal that my dad did. So you had to be, like, at the right time to have those benefits. Now they don't offer those things. So those people's kids aren't going to get it. But that's still a lot of people, right? And I'm going to live how long? And I'm going to keep draining California's money? Well, they owe me anyway. California taxes are ridiculously high anyhow. So fuck them anyhow. You can't invest in the pension fund. So you have the way pension funds work, you have to work in the company or a state entity. Companies don't even offer pension funds anymore, unless there's like some European companies that still might do that. But no, there's definitely no American company that still offers. So only way is the state government, federal. I mean, state governments are pretty good, I think, more than federal in terms of pensions. Maybe, I'm not sure. I haven't did any comparisons. In John Galt's show, like Kimmy Cakes, she works for the public schools in New York. So she mentioned a few times about what she was getting. I think she gets a pretty good fat pension when she retires. Okay, so you can do comparisons between different, if you get people to talk about it though. Yeah. Who the hell is Kimmy Cakes? That's John Galt characters. I don't know. I haven't seen her in a long while, so I don't know where she is. But when she was around here, she was talking a little bit about what she was getting and stuff. Yeah. So, and you know, you should ask John if he can interview some of his tenants that work in the federal level and see what they say, if they get what kind of pensions they get, what kind of benefits they get. I don't know if they just transfer everybody to 401ks now. You know, it could be that lazy. These guys might not even give out pensions. They might be like, oh, well, we'll just use 401ks, because 401ks, you know, the reason they want to do that is because they can offload the busy work. When you have pensions, you have to have your own administration. You have to have accountants and people do that. When you do 401ks, JP Morgan takes over. Vanguard takes over. See, so governments don't want to pay for their own accountants, right? They have to supply their own accountants to manage all these people's pensions, to make sure every penny is sent out the right way at the right time and this and that. So there's a whole administrative structure around huge pensions, and they probably don't like that. The government will probably be thinking, man, we got to get rid of pensions, honestly. We got to get everyone on 401k, so JP Morgan does all that stuff. And then once you give the power to JP Morgan, guess what? JP Morgan can use those pension funds and do shit like what happened today. Who knows if today that whole move was because JP Morgan, you know, having all those funds could like manipulate the markets and shit and just be like, hey, you know, why don't I just get some bonds to fuck around? Yeah, so yeah, you're giving these guys too much power. That's for sure. Like, they make jokes that JP Morgan is like the fourth branch of the U.S. government. It might as well be at this point. Yeah, they control too much, man. Okay, well, JP Morgan stock didn't do well today. Let's see. Let's look at the overall banking sector. Yeah, banking sector down 2%. That's not good. Usually banks are mild, so that's not a good sign either. Okay. Okay, well, it looks like tomorrow we'll have to look more carefully. I don't know what's going on. So okay, anything else? I covered that. Okay, let's look at MSTR before we leave. I don't think I have enough time to cover everything I want to cover from earnings. I wanted to go over some stocks again and stuff, but I don't think we have time to cover that. We have to go read the articles, spend time on this. So MSTR is in this mode now, you see. So we stayed at this above the dashed line, 122. That support that was set back in February 4th before the last leg down, and we supported that. That's good. Now, the thing is that I told you guys that there could be a chance that Bitcoin will make a return to 60K or lower, and that probably would happen over the weekend. If that happens, then you can make a quick trade, you know? You could make a trade over the weekend if you're bored. So if you're bored and you see Bitcoin going to 60K again, and then it drops below it maybe, and then you see a lot of volume come in, then I would buy it. Okay, if you got a Coinbase account or something and you just want to do a quick trade, whatever, or whatever exchange, crypto exchange you want to use, get in there, because if it bounces, okay, and it could be like Monday morning, okay, Monday morning. So the market won't open for the U.S. market on Tuesday, but the futures market will be open Sunday. So even we have a holiday on Monday, and when you see the futures market open 6 p.m. Eastern, it will affect Bitcoin because there's a lot of Bitcoin futures, and Bitcoin futures will affect the spot price. So what you'll see is that 6 p.m. Eastern, something happens. All right. Maybe some news happens over the weekend and Bitcoin does something. And then on Sunday, when the futures opens, people start buying it up or something, or maybe it goes down lower. Then Monday, it starts recovering. Then that's what you would do. You would try to buy it at $60 or less, because then you can make a quick trade to 80K. Because if there's a second bounce, then I think that will be the last one. So let me get the Bitcoin chart up. So when it made this move, I said this is probably the zone we're going to be in, this pink. So yeah, because these were significant moves, but it doesn't mean like you can have a V recovery. It means like there's going to be some people trying to get out here, and it's starting to weaken, right? The people that wanted to get out at 70K have finished selling, and now it's weakening. We're going to have to find new buyers. And so this thing will just go down, and maybe it will not hit 60K and just roll back up and go back to 70. But if it does make a second move down, that could be a spring event, okay? Because it has to retest 60 again. And then there'll be a second wave of buyers coming in at 60K and below, and they'll push it back up. It'll go back up to 70 probably by Tuesday or something like that. So if we have bad news on the weekend and it goes down Sunday to Monday, something like that, and it bounces into Tuesday, and the NASDAQ is cool, then we could go up to 80 real quick, and then you would sell up here, okay? Sell somewhere in the 80 zone, 75,000 to 80. You could make a quick buck that way. And then after that, you can rethink about like, okay, should I short again and go back? Because once it goes to 80, I think that's it. That'll be the last time we'll see 80K, and then Bitcoin will go down to 30K. That's probably what's going to happen, based on like if the NASDAQ, it depends on when the NASDAQ wants to die, because the NASDAQ looks like it wants to go out, but I don't know if it's going to do it before NVIDIA earnings or after NVIDIA earnings. That's what I can't figure out. Okay, man, state pension funds are a racket. They scam employees by skimming the cream. You're better off just throwing your retirement into an index fund. You know, it depends on the benefits, right? So the benefit there was that your descendants get some of that benefit. So that's one good thing. Also, it's like my dad gets essentially 50% of his original salary so the last year that he was working, That's basically where he gets paid at. The other thing too is the medical benefits. So my mom gets a higher Medicaid plan. So if you just get regular Medicaid, it's normal. But she's healthy, so she didn't need any of that extra stuff. But like, so you could get a better plan, a medical plan, when you retire, working in state. So that's another benefit that they get. So than the usual Medicaid, Medicare that you get from just straight up like applying through the government. Yeah, so that's the only things I would say. But those things could be gone now, right? If you tried to get in the government, and it varies between different government entities. Some city government gives out better benefits to compete with the state government. So if they want higher talent in a rich area, so if you have a city that's really wealthy and they want to attract better talent, they'll compete with the state or federal level by giving bigger, fatter benefits that way, just to lure people in. So when you add all that up, you get a lower salary, right, than a private company, than working for a private company. But when you add up the benefits, it's just way more than what you would get in the private sector. So it really depends, okay, on where you want to be. And then you can double dip too. A lot of people just go and jump between this government entity to another government entity, and then when you retire, you get all those benefits cashed out simultaneously. So I could be working for 3 different government agencies or different municipalities, and I just get all of them cashed out. That's how people do it. That's why everything's bubbling up, because you can double dip. So it's crazy, man. So anyhow, Bitcoin 30K. That's wacko. Now it's gonna happen. Sorry, the cycle say so. We're at the end of this cycle. You have to wait another 4 years before you get anywhere. All right, we're done with that. Let's go to play a video. Play some Martin Shkreli. Okay. I think this ties into my last presentation, and then because he talks about volume. Volume is disagreement. Okay, this is what he does. Okay,
I love the idea of never selling because, like, it changes the stock price. I think this is really funny because you can have a stock that's 95% owned by one guy who's never selling. Like, the trust can't sell. And that stock price will be the same volatility as a stock price where it's 1% holders. It doesn't change anything because the marketplace is a bid and ask, and the bid and ask is determined by the buyer and the seller right now, not these guys on the sidelines. In fact, it probably makes it worse. So to me, that's the baggiest comment of all. It's an insane thing. It didn't work very well for AMC. It didn't work very well for many other companies. It doesn't matter if the company is going to grow or not. If I said I'm going to give you $15, it's no growth. $15 spread over 3 years, 5, 5, and 5. Would you buy that for $60? No, of course not. It's overvalued. That's like buying IonQ. If I was going to say that you can have 5, 5, 5 every day, every year on January 1st, you get $5 for 3 years. Would you buy that for $6? Yes, that's cheap. I don't care if the number's growing or shrinking. Here, watch this. Let's say it's $5, then $4, then $3. Oh no, the number's shrinking. It's a bad business. Would you buy that for $1? Of course you would. You're going to get a total of $12. So you buy it for $4. Sure. Would you buy it for $12? Well, no, I wouldn't, because I'm only going to get $12. I'm going to get that over time, so I'd rather have the $12 now. What would you buy for $11? No, probably not. I can reinvest my $11 and do better. So at some point, that's an equilibrium, and that's called the discount rate. So we buy stocks or bonds or any asset if they're cheap enough. Now, for some people, they're really stingy, and I recommend being this way, where you're only going to buy the cheapest, finest, cheapest stocks, where that 543 payout, that's $12 over 3 years, maybe you want to buy that for, I don't know, $6. You want deep discounts. Super Micro, 22 million shares, down 7%. Now, in a situation like Super Micro or GameStop, or even D-Wave, you know, these are stocks where the market is trying to figure out what the price is. And it's the market is telling you something is wrong with this price because people are trading, and a trade is a disagreement. A trade is, I want to give you cash for this stock, or I want to give you stock for this cash. And the more people that disagree, the more likely it is that, one, the price of the stock is not exactly correct, and two, that maybe the price of the stock is going to become corrected. You know, that's just, you know, a good way to think about it. Volume is disagreement to me. I'll call it 50 or 60 billion dollars have traded on these 25 stocks. So, you know, the market sometimes is a little smaller than you might think. Is volume really disagreement? I think so. You've decided to change out your holding for cash or change out your cash for the holding. It's a big decision. Something forced you to do that, whether it was the price was attractive or you think the price is going to become less attractive or more attractive. That's portfolio sizing. Somebody asked about sizing. That's where I was going with it. Okay.
All right. So volume is disagreement. So I just want to play that up to that level much. I might go back to this video later if we have time, because he says some interesting things at the end, but we might not. I'll have to save it for some other time. But that's the key point. Volume is disagreement. And remember, 3 streams ago, I talked a little bit about like effort and result. And in yesterday's stream, I repeated again, effort and result. Okay, so let me get here. This is the thumbnail of yesterday's stream. Okay, and then I'm going to read the quote for you again. Okay, so you see this thumbnail, right? From yesterday. You have bulls on one hand, bears on another. Okay, and bulls represents the buyers, bears represents the sellers. Okay, everything is like an auction. We have to come to an agreement with the price, and then we agree to it, and then we exchange money for the shares, right? Now, there will be a time when everything is at equilibrium. He was talking about equilibrium, right? When the price kind of stays static. And we had one example of this yesterday. It was a very good example. It was Exxon stock. Because for many months, pretty much about 4 years now. So let's look at Exxon. So for many years, we were in this range. So on average, it was like about 110, 115 or something, right? So people kind of agreed. They said Exxon is worth between probably $110, $115 a share. Okay. And then all of a sudden, we get this movement here. So maybe just before earnings, I don't know, but it was already moving up to the top. And then once we got earnings, you push up. So something changed. A feather's weight, a feather dropping on one side finally pushed this up. And that's when you get the most exciting movements in something. Look at silver, right? Silver was going sideways for years. People were tired and bored of that thing. And at one moment, poof, it goes up like crazy. So for Exxon, which is a boring boomer stock, going up like 17, 20% in a month is amazing performance because this thing barely moves on average. Like, so this is where you want to see, this is where the action is. This is what you want. You want to look for stocks that really have been going nowhere for the longest time, because you know eventually there will be an event that will push it out. Now, you don't want to see stocks like this, okay, that do that. Like, let's look at something that will report earnings this afternoon. It was like Twilio, right? Something like this, like a roller coaster here. Or open. No. There's no tight range. This is roller coaster. This is like, what the hell? This means nobody has a clue how to price this stock. Okay, you want to see where the volatility is very small, very boring. And then when you see something boring and has been in a tight price range for the longest time, you want to wait for that time to explode out of there. And if he also mentioned the volume. So he says volume is disagreement. So we had an example of that with semiconductors. So if we look at the ETF here, since the end of last month, so probably 2 weeks now, we've seen a lot of volume coming in. Actually, if you look at it, this has been the most amount of volume so far. Like if you look at the bottoms here that was made here, and let me take off the drawings. Okay, so you see this is some volume here, some volume here. Okay, but if you look at the recent one, if you look at the recent dip, tons of volume as it was going down, tons of volume as it was going up. So, and overall, we went nowhere. We went from the same price back to the same price. Okay, somebody wants to keep it here. Someone wants to desperately want to keep it here. So the two sides have not won. Nobody has won. Everyone's stuck here. And eventually, one side is going to lose badly. So if you see a lot of volume to keep it at this price, if all of a sudden it pushes out and goes up, all the guys that were betting that it will go back down or go even lower have lost, and they're trying to cash out. They're going like, oh shit, I gotta cover my shorts, and they're all buying, and it'll cause an explosion up. The other way is that all these guys that have been trying to keep it up, you know, trying to buy up the shares, trying to keep up all those semiconductors at this level, fail. All of a sudden they just give up, and all the shorts come out of the woodwork and start pummeling it down. It could happen tomorrow because the S&P is below that gamma flip line. Okay, so down here, right? So between July and October, you got a lot of movement. 20% this month, 37% this month, 19%. So pretty much 100%, right, from August to October. And this is 3 months in between earnings reports. So everything's by quarter. So everything is at 3 months. And you just want to play between this and this. Between this and this. I don't want to know what happens after earnings. I don't have a crystal ball. I don't want to do this. And so the same thing would happen between the other months. That was ridiculous. You got trapped like right here. So this is more clear. The daily chart. You go from December all the way up to January. You got hyped up, and then when earnings came out, back down. So you're right back to where you were in early December or late October. But essentially, it's still sideways. The whole blow off up was nothing. It was just noise. Somebody wanted to trap people, maybe. Who knows? But it was overhyped. We're still stuck here. Okay, so this is kind of like where the range is. People sort of agree that Intel for now is worth $40 a share or about, right? We're still above it, but let's see if it drops below 40 and goes to 35. Can it hold that? If it doesn't, then guess what? We're going all the way back down. So I only like to play between the earnings. Most of the moves are between earnings. Yeah, that's it. That's how it is. People, unless you have unless you want to play with options, I think that's the only way to do it, because with options you can protect yourself. So you can bet before an event, and then you can limit how much you lose versus how much you gain. But then we have to get into options, which I don't do. So you got to talk to an options guy. That's the whole purpose with the options. It's like, I want to keep my shares, right? Let's say I have a ton of shares. I don't want to sell, because then I have to pay taxes on those shares next year. So what I would do is I would use options to protect if I think Intel is going to go down, right? So let's say I have way too many shares. If I sell it before earnings, I don't want to do that. Then I would just sell covered calls or do some shit, buy puts. I don't know. I think what happened with Nancy Pelosi converted all her shares into options. So that's what she did. She converted everything into options. So basically, if you have like 1,000 shares of Apple, and you feel like that's just too much exposure to Apple, then you would just convert it down into a few options contracts for less money, and then you would still, even if the stock went down, you would be like, oh, it's dated far away, because she uses leaps, so it's dated far away. It's like dated all the way for like 4 years later or some shit. And so this kind of movement won't affect her, right? But if she had the shares, it would be like holy crap, I just lost like 50 G's in this position and 50 G's in another position. So then it adds up, right? So if she has like a portfolio that's huge and you want to manage risk, you do it that way. Yeah, leaps. Yeah, that's what they are, leaps. So I don't know how to do that stuff. So then there's tons of people out there on YouTube that can explain that. Trying to keep a lid on the pot causes pressure to build. Yeah, you can think of it like that. You can think of that. I want to connect an AI generator to a 3D image. Oh, that would be cool. Yeah, I'm sure somebody's working on that stuff. I want to get one of those bull figurines. Yeah. Yeah. You know what? If we could do that. Yeah, we could do that for sure. Somebody's definitely working on that. All right. Okay, I think that's enough examples for today for that. Okay, time to read some boring articles. Oh my god. Let's see. Some bond, this and that. Is it this one? Is it this one? Yes, this one. Okay. Before that, let me take away the banner. Okay. And let's look at the yield here. So, I mean, not the yield, the TLT, so the 30-year bond. It's been pretty much protected from dropping below around 85-ish, okay, since last 2 years ago, 2023, or 3 years almost. Well, yeah, I guess 2.5, I don't know, something like that. And so I'm gonna be eyeing this. If next week we do have an issue, I might start recommending people to trade the TLT or the leverage ETF for bonds, because if this target of 113 in the DeMark D-Wave indicator is correct, and it's going to happen one day, if this thing really is going to pop, then and break out of 95 again, I might start telling you to do a trade on bonds for about maybe a couple months. Because if you go from 89 to 113 and we leverage this thing, yeah, we could use what's the leverage ETF for this thing? Hold up, let me see. Hold up. Let me see. Leverage TLT ETF. Let's find a 3x. Oh, if you're a European, you can. There's 5x leverage ETFs. They call them ETPs. So if you're in England or in continental Europe, you should have a brokerage that has access to 5x leverage. There's a 5x S&P 500 there, so you guys can go nuts over there pretty easily. So TMF, is that the bull one? Yeah, TMF is the bull one. Okay, so TMF, let's see. Okay, so yeah, let's see what happens with this. If it can cross 50 on TMF, if it can cross 50, yeah, I think we can go a lot further. Yeah, I'll tell you. I'll tell you of next week. Okay, I'll tell you next week. This could be something fun to do. But if it was just a one-off, then forget bonds. Then it was stupid. There was nothing going on. Whoever was trading today was just being a jackass or something. So yeah, leaps are good for that buy and hold thing. If you really go long term, and you use a very small amount of money with the leaps options. But then I guess you get burnt if it drops a lot. Like, I mean, that's the problem with options. Like, you have to know how much you can stand the pain. So you're gonna have to see what percentage like it gets screwed up that you're like, wait a minute, man, I'm gonna my whole account's being blown up now. So you should look up what Nancy Pelosi set her options at, because she I think she did it for Google, Apple. I don't know if she did it for Nvidia, but yeah, you should look at how she set her options. Maybe that'll give you a hint of how low Nvidia could go. But anyway. The mark. Let's look at that, and then I'll move on. Okay, so target still at 53 for here, so it has to hold 58. All right, that's where you want to hold it as it's going down. Now I'm gonna do 240 minutes. So I use the 240 minute, 4 hours basically. Okay, so we had this 13 here. Hold up. Just reset default scale. Let's see. Oh man, I think it screwed up the thing. All right. Okay. So yeah, it looks like it already made a 13 and a 9 here. We got a 2B down here. So this, I hopefully this holds. I don't know how long this will end its count. So it looks like we're gonna have another down count. 1, 2, 3. Start. Let me give you some bond auction education for the day. So I'll let AI talk about it. So AI says today, the U.S. Treasury auctioned 25 billion bonds at a high yield of 4%. The auction saw strong demand with a 2.66 bid to cover ratio. Okay, what does that mean? So if you want to know if an auction is strong, you have to look at the bid to cover ratio, because they do a, I think what they call it is it's a blind auction. Everyone gives their, like, it's not like an auction like where you see it on TV, right, or the movies where people just yell out the prices and stuff. No, like there's no dynamic ask bid. They basically write in what their offer is, and then based on that they determine like how popular that auction was. So we got like a 2.66 bid to cover ratio. I might have talked in a more detail about this in one of my older streams. I don't remember. So the dim sum bond, that's the title of this show, is the offshore Yuan bond, okay, priced bond. So this is what foreigners get. So if I'm outside China and I want to buy a bond, a Chinese government bond or whatever, it's called a dim sum bond. And for early 2026, this has been a 5.91 bid to cover. So the demand for Chinese bonds far exceeds the US one. Now, then I asked AI, what's the typical bid to cover? Okay, so the typical one for US sovereign bonds, US treasuries, is 2.5, representing stable demand. In contrast, Euro area sovereign auctions show different kinds of demand, like between 1.6 and 2.2. So going back here, we see 2.66. So it's well above 2.5 and above the 2.36 average. So this has been a very good auction. So people are going back into US treasuries. Now, I asked AI here. I'm using the Google Gemini AI. I don't know if you want to ask Grok, you can ask Grok the same stuff I'm asking. What is the demand for different countries, right, for their bonds? So what's the bid to cover ratios everywhere else? So recent data shows Chinese debt is record 5.91. We already know that now. Japanese 30-year bonds have good demand at 3.64. The Eurozone shows a wide variation, 3.4 for their 2-year, compared to lower ones elsewhere in the Eurozone. So I guess average is 1.57 here. Okay, so you can compare everything else. So the Chinese bonds have been doing exceptionally well the past several months, I think, and so far very good at 5.91 so far this year. Now, the reason I go over this with you guys is because then look at what China was doing the past several days this week before what happened today. So who was selling all those commodities? The oil, the silver, the palladium, the platinum, the steel, the oil. Who was like, yeah, the gold. Who was doing all that at once, right? And why? For what purpose? Well, because the past several days, China has been saying things, probably things the U.S. doesn't like. All right. Let's read one of them. Okay. This was February 10th, 2 days ago. Yuan advances to strongest since 2023 amid reports on treasuries. The yuan surged to its strongest level, okay, since May of 2023, and after China was said to have asked banks to limit their holdings of U.S. treasuries. So China has told their banks to stop buying up U.S. debt. Any shift away from U.S. sovereign debt reinforces a broader global trend of diversification away from the dollar. Such a move might accelerate the repatriation of capital into Chinese assets, providing a fundamental tailwind for the yuan. Onshore and offshore yuan both extended their advance to strongest level in more than 2 years on Tuesday, following the report. The latest move adding momentum for the yuan, which is already the third best performing currency in Asia since the end of September, with a gain of 3%. Now, if you remember what Samantha Leduc said about looking at the Chinese yuan, she said that the weakness, okay, in the dollar versus Chinese yuan was fueling the rise in silver. Primarily, so this was driving the silver prices, okay? The yen probably driving the gold prices. So the yuan driving the silver prices. So as long as this was going down, the dollar is weaker to yuan, okay? The yuan is strengthening, then silver will keep going up. And since today we had a shock, I kind of wonder, is the U.S. starting to try to fight back now? If they are, then we have a problem, because, you know, this is a war between central banks. And you don't want to be caught in the middle of this war. So that's one reason what happened today happened. Who knows? There's many reasons I could come up with, and we already went over that at the start of the show. So you gotta be careful now if you're looking at silver, because that would mean that we could easily go to 40 next week. And, you know, they have New Year's, right? The whole week. So maybe the U.S. is thinking like, hey, it's going to be pretty easy to start whooping their ass all next week and pump up the dollar versus the yuan. And that might cause more problems with silver. I don't know. We'll see. Okay, China economists urge looser capital controls as dollar wobbles. When was this written? Okay, this was written today. Several prominent Chinese economists have called for loosening restrictions on the movement of money in and out of the country, arguing that a weaker dollar provides a historic opportunity to boost the yuan's global appeal by increasing its convertibility. In what would represent a tectonic policy shift for the world's second largest economy, Miao Yan Liang, chief strategist at China International Capital Corp, said in an article Tuesday that conditions are becoming ripe to push for such reforms without necessarily provoking massive capital outflows. Echoing that view, Yu Jiandong, a finance professor at Tsinghua University, I think I visited that university, identified this year and next as a strategic window for opening up the so-called capital account, because the yuan's appreciation provides a favorable environment while geopolitical risks rise. Okay, that's not good. The more China opens its capital account and allows greater exchange rate flexibility, the more it can actually attract capital inflows, said Miao, formerly the chief economist at China's foreign exchange regulator, especially when the dollar enters a strategic and sustained depreciation cycle. and the yuan enters an appreciation cycle. That is precisely the right time to raise the level of capital accounts openness. Oh man. So yeah, I mean, if I was in the government, I would not be liking this, because so if the dollar is weak to yuan, then and you're helping them out because now they're deciding to push money back into China, after years and years and years upon years of weak yuan and higher exports, because China was supposed to be a exporting country, right, for most of that time. Now they don't want to do that no more. They don't really care anymore about exporting to the United States. They're shifting their exports to other countries, like in Europe, in other areas of Asia and Africa, and South America. So they don't see the need to keep buying U.S. debt. So this is one leg off the. Well, people would rather buy Chinese debt than U.S. debt, and offering support to Beijing's push to expand its currency's global use. Beijing sold 14 billion yuan, 2 billion of debt in its first Hong Kong auction of the year, and the offering was oversubscribed 3.94. So that was I think this is what the bid or whatever bid to what cover ratio is. I don't know if that's the same. Calling it oversubscribed. Okay, so the Ministry of Finance said on Wednesday yields were offered at the lowest since at least 2013 for 2, 3, 5-year notes, according to data compiled by Bloomberg. The sale bolsters Beijing's efforts to promote the currency's wider use at a time when investors are seeking to diversify away from the dollar. The strong demand coincides with a rebound in China's onshore bond market, where 10-year yields slid to a 5-month low on Wednesday. So that means we get a nice demand. So lower yields means more demand for the auction, higher price. So yields and price go opposite in bond land. Okay, we talked about that before many times. So you guys can look it up. The offshore yuan yield curve has moved closer to the onshore curve and no longer carries a yield premium. Head of foreign exchange rates, Francis Chung, strategy at Overseas Chinese Banking Corp. Offshore yields are likely to move more in tandem with onshore yields, which may also act as a floor. So onshore means local domestic buyers are buying bonds, and offshore are the foreigners buying the bonds outside. The 2-year bond was issued at a yield of 1.38%, while 3-year and 5-year debt were sold at an interest rate of 1.4% and 1.57%, respectively. The issuance on Wednesday also included 10-year and 30-year maturity bonds. Ample liquidity supported by central bank injections and expectations of further monetary easing are helping anchor yields on Chinese bonds. companies accessed a deeper pool of renminbi liquidity amid a firmer currency, bankers said. They added that the stronger yuan could extend last year's issuance momentum, which was already in the highest in years. Momentum is expected to build on last year's rebound when issuance surged to its highest level in years. Strategists at UBS Global Wealth Management said a stronger yuan would be a key catalyst for the market in 2026. The People's Bank of China on Wednesday set the yuan's midpoint rate, the daily fixing, at 6.9438 per US dollar, the strongest level in nearly 3 years, signaling tolerance for further appreciation. Okay, so let's see. Chinese technology firms have returned to the market after a multi-year lull. Short video platforms Kaoshao Technology announced plans in mid-January to raise the equivalent of $2 billion through its first offshore bond sale, joining Baidu, Meituan, and Alibaba Group Holding, which tapped the dim sum market last year. Alibaba owns the South China Morning Post. So where you're reading. So all the Chinese tech companies are getting those US dollars. So I'm guessing the US doesn't like this at all. At all. China has been artificially capping its currency. Doesn't this spell trouble for them? They don't want to cap it anymore. They don't care about their exporting anymore to the US. They are willing to not care about that. They want the dollars to come into them and convert it back into yuan, which means they're ready to disconnect the umbilical cord with the US, right? So they don't want to buy our debt. Everybody else wants to buy their debt. That weakens our position. So that's it, man. So yes, you are correct. Ugh on YouTube. Crap, this sucks means our dollar is going to be crap. Need to buy BTC. Well, or buy something else. Okay. Yep. So I think so there, you got that right. You understand now. They're willing to, they're willing to exchange this problem because of course China's still a major exporter to the United States. The trade imbalance, right? So that's what Trump's always been harping on. Trump was always like, bro, our trade difference between us and you is way too wide, so we're gonna put tariffs and shit. But it's way too late to do that. It's way too late. China's willing to not care about this anymore. That's why China hasn't had much of an effect from the tariffs. We put 200% tariffs on them already. They don't give a shit. Hopefully that means the market will keep growing. We'll see 100,000 Dow and 14,000. I don't know, man. I don't know. We'll have to see. So, yeah, I mean, the cycles. 30,000 is just a number, that makes sense because that's the last major, but who knows? Yeah. So it's just a cycle thing. Maybe I'll talk about Bitcoin again some other time, but we have to watch how it does next week first, and then we'll talk. We'll reconvene. We'll talk again. Okay, so Euro and Yuan global ambitions hasten the dollar drop. The dollar is sliding again against Euro and Yuan, just as European and Chinese leaders are seeking to boost the global role of their currencies. This was written February 11th, taking advantage of the rising dollar doubts. The latest exchange rate shifts seem to be playing out as desired for all parties, especially Washington. With Lunar New Year holidays looming, China's offshore yuan has surged to its best level against the dollar in almost 3 years. The greenback has lost 6% against the renminbi since the start of last year. So a lot of the reason why you have this effect is because of Lunar New Year's. A lot of Chinese will pour their money back into China, for the Lunar New Year's. So this is a seasonal thing too. So it might not be anything too serious. We have to see if this is a trend that will continue from last year into next year. So yuan and euro climb against retreating dollar. Okay, that's fine. We know that. The euro is 50% surge against the dollar over the same period is even more pronounced as the exchange rate stalks the 5-year high above 1.2 set last month. These moves are in line with the recent jawboning by leaders in both areas. Only last Thursday, European Central Bank sources said the ECB, the European Central Bank, was planning to back up its long-standing call for a global euro by working to extend euro liquidity to more countries. making it cheaper and easier to use euros overseas, bolstering the currency's multinational role. Okay, so even Europe wants the euro to be more of a global reserve currency, I guess. Okay, so now everybody on Twitter thinks this is the reason why gold, silver, oil, everything, all the commodities were crashing. Copper, steel, aluminum. Kremlin memo outlines potential U.S.-Russia economic pact under Trump. And this was reported by Bloomberg. That's why they do it. Bloomberg wants you to buy their Bloomberg terminals, because if you buy their Bloomberg terminals, you'll get the news a millisecond faster than everyone else. So that's why they charge 20 G's for every year for you to get a subscription. Russia has outlined potential areas for economic cooperation with the Trump administration, including a possible return to using the US dollar in bilateral dealings, Bloomberg News reported, citing an internal Kremlin memo. So this is a rumor or what? So you think a rumor really did all that damage? I don't know. Or is it because of what I said at the beginning of this presentation? The senior level document dated this year sets out 7 areas where Russian and U.S. economic objectives align after any Ukraine war settlement. So even after all this shit with Ukraine, the Russians are willing to get back on the dollar system after being cut off and essentially ostracized from using any dollars anywhere. They really want to do that again? Huh. I don't know. It sounds ridiculous to me. I think after you were taught a lesson, you were shown that, hey, if you don't do what the U.S. says, you get cut off from the whole banking system of the world, because the whole world uses dollars. Even the Europeans don't even want to do this no more. They want the euro to take over. And the Chinese are definitely not interested in this. They already knew that. That's why they were buying up a lot of gold since COVID. They were preparing for this eventuality. So the Russians are willing to go back? Are they that desperate? I don't know. These include cooperation on promoting fossil fuels over renewable energy, as well as, oh, really? So as long as you say oil and gas are cooler than windmills and solar, we cool now? We cool? Man, I don't know. This sounds so ridiculous to me. As well as collaborative ventures in natural gas, offshore petroleum, and strategic minerals that could benefit American firms. I doubt it. I really doubt this thing is true. Interesting. Get Mark and Scully's Bloomberg competitive product. Yeah, I know. I was talking about that last year too. I was talking about Godel. I haven't really paid attention to how much better it is now. So yeah, you guys should check it out. The Godel terminal. Let me get the website. Godel terminal. He also has a Twitter account, Godel terminal, GODEL terminal. Let's see, Godel. Okay, here you go. So you guys, I'll put the link in the thing, and you guys can go check it out. I think he offers discounts from time to time, so you can get a promo code or something from somewhere. So GoDelTerminal.com. Yeah, he if you were early adopter, yeah, it was a lower price. Yeah, and he had promo codes and stuff. I don't know. So you guys can play around with it. Okay, so anything else here? I got 2 more articles or some shit. Same one. China gives up on state-backed digital cash. The U.S. and Europe should take note. I think this is a pretty long one, so maybe I'll go back to this some other time, because this is not an article. This is more of a research note or something. Yeah. But anyway, okay, so looking at the boomer portfolio today, as you know, the stock market went down, and we have to see what damage was incurred. And gold and steel, aluminum, all that went down. So oil, so all this stuff took a hit. So we got to pay attention to how much this will last into next week. and from there I'll see if I want to keep these stocks tickers. So let me put up the banner. Okay, so I want to build a buy and hold portfolio of something, of boomer stocks, and maybe a few risky ones like this. A hair just gave up what it got yesterday, so it was like up 30% or for some reason, and it just went down. It wasn't earnings. A hair test systems reports earnings like at the beginning of January. It wasn't earning. It was something. I didn't have time to look at what it was. We have German steel here, which took a big hit. So out of all the little steel companies, it's just like, whoa, okay. And it probably is because of the dollar, right? Like, if people had to get out, they probably didn't want to own a European company. That probably could add it to the effect. And so we'll pay attention and see how this goes next weekend. We'll see if it holds. Now, ESOA still held. All right, so it's been up since last week. So after earnings, it's up 55%, and it had no issue today. TMC, I recommended this one, and it went from $1 to what, $8 within like 6 months. Yeah. Let me see. 2-year chart. How about that? Yeah. So I recommended 2024. So if you were buying around $1 or less, it's just started flying at the turn of the new year of 2025. So ESOA might be the next TMC for me. So I only recommended like 2 stocks in 2024. It was Palantir and this one. So both of them risky in different ways. One of them was literally just a penny stock. This is the penny stock. And the other one, does undersea mining. So it goes in the sea and mines. So Trump was really talking it up, and they had some changes in the board of directors. They had some new guys come in, so they got really hyped up. And Trump was like, oh yeah, he's going to speed up licensing for underwater mining. So yeah, so they mine mostly nickel, cobalt, all kinds of crap under the water, under the sea, baby. So who cares about the Little Mermaid? Yeah, just wreck that shit, right? Just extract all the minerals. So ESOA could be the next one, man. Could be the next one. So we've been like doing this zigzag, and we might be done. Hanging out, because if you zoom out, like, it went from 72 cents up to pretty much $10 on average, and this might be the next leg up, because I think if it breaks this area, it should be able to hit like 20 and plus pretty easily. But overall, it has a trend. It's just dangerous because it has so much volatility, right? It's very volatile, so you have to stomach it. So we'll see with that. I don't know. Alrighty. I think I'm done. There we go. And also TMC. If TMC stops goofing off between $6 and $10, I might go back and look at that again. But so far, it's been like a shit show over there. It's like it's only good for trading. I want to buy and hold that one if it's gonna go up away from $10 and goes up to 100. I want another 10 bagger on that one. So we'll see you guys later. Okay. Tomorrow probably a big day. Remember, 8:30 Eastern, 8:30 a.m. We'll have inflation CPI report, and that might move the markets. And if it does crash, then be afraid for next week. Yeah, Monday is closed for President's Day for the NYSE. Futures will be open though, and the rest of the week with Lunar New Year's, Chinese market is closed, except for maybe Hong Kong, which reopens midway through the week. All right, good luck.